I remember back when I had the vision now. I gotta see it happen. It's action over acting. I'm not gonna be slacking. Trying to keep the focus, but I keep getting distracted.
Welcome, Veronica, to another episode of Sell Your Queen's Home. How are you?
Thank you. I'm doing okay, holding up, getting a little stir crazy, but getting used to it now at this point. It's a new norm.
Yeah, I mean, at this point, we have no choice, right? So, but we are still servicing from home. I'm in the Bat Cave. You're in your place. I heard that Freedom Mortgage is 100% working from home now.
100% working from home. Only the essential workers are in in the headquarters building, like accounting, things like that. Compliance, less than 10 people, of course.
Of course. No, everything within compliance, obviously. Being that my God, why are so many people messaging me at the same time just now?
That's good. You're busy.
Yeah. Well, I'm time blocking right now.
People are still buying houses.
That's right. That is what that means. I actually had a conversation with two buyers earlier, which one of them, we'll see what happens. The other one seems like they're interested, but they're just before the pre-approval process. And so I wanted to have you on here because a lot is going on. A lot of people hear a lot of different things from the news, which doesn't really translate well. They need a little more of a local perspective, what's going on here in New York, in Queens, Long Island, and the 5 boroughs. So how are interest rates today? That's the first question that everyone's asking me. And I have the pro here with us. So Veronica, how are interest rates today?
So interest rates are still at an all-time low. Like right before this whole thing happened, they're still at an all-time low. When it comes to your conforming loan amount that's under a jumbo, when you have good credit, putting a certain amount down, your definitely your interest rate is going to be looking like in the low 3s on an FHA, which is a government insured type of loan.
Okay. And now when you say a jumbo loan, what does that mean for the average home buyer?
So for the average home buyer, just so you know, right now the loan limit is for a one family home is $510 and change. So what happens is once you go over that, then you're in what's called a jumbo type of loan. When you go over that tier, your interest rate changes completely. And now you have some banks who aren't even doing those types of loans at this point, and only because they're much higher risk. So what's happening is investors are not purchasing any loans that are going to be at a higher risk, which in this case would be an FHA type of loan. When it comes to the risk factor, there's going to be different components that come into play. So there's your credit score. There's whether it's going to be a primary or investment property. So all of these things come into play when it comes to your interest rate, but there are changes that are still coming. I know next week there's something coming out with, so I'll be on your next show to give you that update. Every week, every day, something's changing when it comes to this. So hopefully people understand out there exactly what's going on. A lot of people are still taking advantage of the low rates when it comes to refinancing. That's what's really been happening right now. That's soared, and again, any changes that are happening, we're really here just to be able to update you with all of that.
Okay, and now being that New York, it seems like New York has a lot of jumbo deals, right? I would say. How do you see the market moving in terms of? I know that there are still deals coming through, but have you seen a decrease in terms of the number of buyers or in terms of the number of deals that you would normally see maybe year over year or during a regular April?
So believe it or not, Freedom, at least for example, since this whole thing has happened to now, we've had a lot of deals closed because they were in the pipeline from before and things like that. But when it comes to new buyers, I have been seeing a decrease in people who are looking as much as, not as many as before, people who are coming to me asking to get pre-approved. But I will say that the people who are coming to me or getting referred to me are definitely most likely the most serious about this, because in the middle of a crisis, there's still people who need to buy to get into a home. They might not be able to live comfortably where they are now, or they might have realized now, during this pandemic, that they don't want to be in that apartment anymore with 3 kids or whatever it is. And now they want to move forward. So I have been getting calls for pre-approvals. It's just not as many as it was right before this pandemic happened.
Right, which would be all natural, right? Because before the pandemic, you did have people that were curious, that just wanted to kind of shop around, see if they could qualify for something, and then maybe they'll go and buy something. A lot of people are stuck at home, and like you said, I've had people that they're living at home and they're like, yeah, there might be a divorce coming after this is over, so we might have to be finding a new place, right? So a lot of people have
Right.
changed, and you're absolutely right. As far as serious buyers, like I have a few buyers that every day they're still asking me, like, does this home have a virtual tour? Does this one have a virtual tour? They're trying, but some of the agents in our industry have not adapted to what's going on. And you have some homeowners that would have no idea how to conduct a virtual tour. So we're getting to a new norm, right? So it does make sense. And I feel like after this is over, I kind of feel like there's a pent up demand that's going to make up for that.
It depends. I think I think that depends, because it really depends on what's going to happen with the how we're going to calm this whole thing down. So if, let's say there's like a medicine or something like that they're going to cure it and that's it, definitely I feel like that's going to open the floodgates right away. But if it's going to be something where all we're doing is containing it more, I think it's going to take a little bit longer. This is just my personal opinion, because it's people are going to be afraid of going out there and looking at places and things like that. But we still have things in place, systems in place to make these things happen. For example, during the process, what you have done is an appraisal on the house, and somebody does have to go to the house and do an evaluation of the property. And in certain cases, what we have now is our appraisers are doing exterior appraisals, or they're doing what's called a desktop appraisal, where they're looking, they're doing their comparables online. And these are just ways to get around people to have to make contact with each other or anything like that. Closing, same thing. I've heard of so many different creative ways that people have been doing closings. Closings that I've had, like last week, for example, there's one, there's people who are pre-signing documents, but they're still going to the office. So they just have like less people going to the closing, but they have their masks, their gloves, and things like that. It really just depends. I've seen people who are like doing it out of their cars. They're doing it like flipping it through the window, through the door, the papers. So people are getting very creative, and but I do feel like what you're saying is right. It's going to definitely get really, really crazy once it's over. Everybody's going to be like, all right, now we're ready to go. Because I have people, just speaking about pre-approvals,
Mm-hmm.
I've been talking to people in the past couple of weeks, and we're just really preparing. I'm preparing them for when they do go back out, because some people need, maybe they're looking to improve their credit a little bit so they can have a better interest rate. So I'm telling them, hey, do A, B, and C while we're waiting. And then by the time we get out of this, you'll be 100% prepared, ready to go. Same thing with people who are saving money. They might need a little bit more for that price that they're looking at. And, that's something that I've been seeing when it comes to pre-approvals.
And see, that's good to know. One of the things that I have seen is that with buyers that were really like chomping at the bit when this first happened, and remember, inventory was tight even before this happened, right? So like there were buyers out there, but they were getting beaten out by multiple offers, or the prices were too high for them. So for some people, this has been a blessing in terms of being able to save more money, in terms of giving them time to work with someone like you that can coach them through what they need to do in order to be able to qualify for a loan down the road. There were a lot of people, actually, I believe you and I had some buyers, the mutual buyers, that they needed time a while ago in order to be able to purchase something where they might have been looking for a one family for X amount back then. Now they might be able to save a larger down payment, maybe move into a 2 family, or something might have changed. So I think throughout this process, it's been important for us to stay in communication with everybody that's been in our pipeline to kind of update them as things change, right? Because that's the reason that you and I are always on these different calls where we're learning things every day to be able to communicate that effectively to the people that we're working with or the ones that we will work with, right? So those people that maybe they did try to qualify for a loan, let's say a year ago, and their credit was messed up or what have you, whatever the reason is, they were on a deed in another state that they didn't even know about, or all those weird things that happen. How would they reach out to you in order for you to be able to kind of guide them through what they need to do in order to get back on that path to home ownership?
Well, they can definitely give me a call. My number is 631-885-4812. I work by text, email, phone, Zoom now. So, a lot of people who have been pre-approved, let's say a year ago, for example, have reached out to me, or maybe they were pre-approved by a different bank and want to see their options. They've reached out to me and just said, hey, I was pre-approved for this much a year ago. Is this still going to count now? And what do I approve for now? So the first thing I ask is, are you working? Because a lot of people are not working right now. And that's the major factor. And one of the things that that have been a change, I guess you could say, is verifying all of these employments. So if you're self-employed, for example, we have to use common sense. If you're not considered an essential business in New York right now to be open and you're self-employed, it's going to make sense to an underwriter that you're clearly not open. Even if we can show you tax returns that you had income last year, you had income year to date from the beginning of the year. If you're a nail salon, just to use an example, they're going to know that you're not open. So if that's it's really going to depend on everybody's situation. Is always going to be different. But people who have come to me, let's say that that were pre-approved a year ago or whatever it is, we always want to update credit. We want to update their income information. Maybe they save more money now. Maybe they qualify for more. A year ago, I could say even rates were much higher, so they might qualify for a higher price because we're at a lower rate right now. That was happening a lot even before this crisis. People were reaching out. We were reaching out to people we had pre-approved previously, and let them know, hey, you guys you can qualify for $50,000 more on the purchase price now because the rate is so much lower.
Right. So for those of you that are following along, whether you're pre-approved before a year ago or even a few months ago, right? The cutoff, I would say probably anything pre-approved before a month ago, was it, that they need to revisit at this point? Just based on,
I would say even the beginning of April. Yeah, the first week of April is when our company made any policy changes. So anything prior to, let's say, the beginning of April.
All right. So yeah, for those of you guys that were unsure, some of you have reached out to me. This would be a time where you might want to reach out to someone like Veronica to kind of revisit where you are in terms of, did your buying power go up? If you have a job situation and you were in the middle of buying, how that impacts you. Because now they're doing verification of employment up to the day of closing, if I'm not mistaken?
Yes, it's within 5 days of closing. And now what underwriters are willing to accept are like direct emails from the person who, let's say, filled out that verification of employment to begin with, or from the CPA, the accountant who does their tax returns if they're self-employed. There's different ways that we've been able to maneuver those things just so we don't have to hold up closings. But you're bringing up a good point, because maybe, before this whole thing happened with an FHA loan, we were able to do loans for people who had a credit score down to 501. And now what's happening is our minimum score requirement is 640, which is relatively low compared to other banks that I've seen out there. Different banks have different credit score requirements, but it is for people's safety at the end of the day.
And see, this is off topic, but it kind of covers something that people have asked me about, which I've seen a lot of realtors make videos about this, about how this situation differs from '08 and how, that recession doesn't equal, like that was a housing market collapse that caused that recession, right? Whereas this is a global pandemic affecting every industry on the planet. And really, When it comes to, let's say, this, you know, this situation with the banks, you guys, well, not you, but banks are looking at, they're factoring risks factors for their investment, right? Because at the end of the day, that's their investment in people, and they're protecting people from making those same mistakes that led to that housing collapse all those years ago. So in reality, you can see that all of the things that we've learned over time they're kind of kicking into place now, where now you're getting minimums that are brought up. You're not looking at those loans that were just on verbal verification of employment. Like, yeah, of course I make $1 million, right? This is more like actual protection of the consumer and for the banks that are investing money into this. So I see that as an overall good thing, especially because of all the uncertainty, because that's really the major risk that you have here, right? There are people, right? I'm not sure what you're doing with these people, but let's say people that have been furloughed, where they were in the middle of a deal, or yeah, mostly it's in the middle of a deal, and you know that they're furloughed for X amount of time. How are you guys handling that, where they're not getting paid now, but they still have their job technically?
So we've put systems in place where we're separating which loans we know are going to be closing, which loans we know are have borrowers that are still working, and then we've been able to separate and put on the back burner those that are furloughed, like you said, or that are currently not working. So people who are furloughed is actually a better situation than somebody who just became unemployed, because they have most of the time have a definite date of return. So if we have something like that, what we're doing is we're just putting it to the side. We're keeping it active. It's just going to be a longer period of time that they're going to be waiting to close at that point. And that's obviously with all parties in agreement that an extension can be put in place.
Right. And that was actually what I was going to mention, because that's not the part that you're involved in so much. The attorneys, the buyers, and the sellers all
I'm involved in everything.
Oh, I'm sorry. But I mean, in terms of negotiating that, right? Like they need to negotiate that the deal goes until this certain date, because if not.
Yes. And what I've been finding is exactly, I think that's when I leave it to the attorney. I say, listen, this is what's going on. And what they do most of the time is request like an extension for, let's say, a commitment or a closing date, whatever it is. And I've been finding that sellers have been mostly okay with it, because they know that they don't want to put this house back on the market anyway. So they'd rather have a definite person who's going to be able to close in the future, rather than having to put it back on the market and just be uncertain about it again.
Right. Especially now, even more so, because if you're looking at a deal that's been in the works for a little bit, they finally get an agreement, and now you have a little bit of a situation where it's going to be an extension of time versus maybe price reductions, maybe, you know, whatever might be different. Maybe this goes longer and it just becomes a bigger issue. And sellers, I would say, depending on the negotiation and the circumstances of each particular deal, I think that as long as everyone's acting in good faith, I have a feeling that people are more likely to accept the terms of extensions, because honestly, this could be things, you know, let's just say it could be next month that things are back on, people are working again, more, you know, different jobs are considered essential, or however they're going to do this on the long term. We don't know that yet. So no one knows. So no one's acting, you know, all shady or anything. All the cards are on the table. Everyone knows what the situation is. So, but I know that you've been in there, and you have to communicate with all parties, of course, because you need to be aware of what's going on. But it's nice to know that at least you've seen where you guys have a system in place where you have things on the back burner, on the side. You still nurture that. You still keep an eye on that. And as things progress and change, you go back to that. If that's the case, get it back to, you know, back on track to where it needs to go. So is there anything that you would, if let's say someone on here was thinking, I would love to buy a house, but you know what, let me just do this after everything is all calm. What would you say to a buyer like that?
I definitely, I was going to say something before when you were speaking also, that, you know, the other end of it is that we don't want to put somebody in a house that they're not going to be able to afford the monthly payment on. That's the whole point of this whole thing. You know, then the following month, they're going to have to, go for foreclosure, whatever it is. That's the opposite of what we're trying to do here. So I would advise, especially anybody who's not working, don't, worry about your family first. Worry about what's going, putting food on the table and things like that first, and then being able to look for something in the future. A lot of people have been asking me, do you think prices are going to go down and things like that? I can't really say. I don't really know. It's really just going to depend on when this is going to be over. I know from the standpoint of banks, there's a lot of people who are going into forbearance because, there's the banks giving them that option. And that's going to be a good thing for some people who are going to be able to catch up to the payments, and then maybe for others not. So it's really just going to depend. But I would definitely tell somebody who is looking to get pre-approved that it's a good time now, at least just to get prepared for the future. We could always have just that conversation about it. I think it's a great thing to just to start that conversation, open it up, and educate yourself on, or for me to educate you on what programs are available for, let's say, a first-time home buyer, anything like that. Because we're still working with Sony May, the state agency that is offering down payment assistance, and also the $20,000 grant for vacant homes for renovations. So those programs are still active, they're still happening. It's just a matter of, each person's situation, again, is different.
Right. And the good news is I did see a stat. I'm pretty sure it was 6%, but between 3 and 6% of all loans in the country, it looks like are only the ones being affected in terms of a loan modification or forbearance kind of situation right now. So it's not like it was back then. And as far as your
exactly.
point, and that's what you're protecting, right? As a bank, you're protecting these people from making a purchase that would damage them for years, whether it's they have to do a short sale, whether they have to do a foreclosure, whatever, put that extra strain on their family. There's no reason to do that until until it's the right time for them to make that purchase, right? So it's nice to know that it's much more responsible industry, I think, now than it used to be. And in terms of what you were mentioning, as far as prices, people keep asking me left and right, should I wait? Prices are going to come down. Like you said, it all depends on everything, right? But if the factor remains that inventory remains tight and, the interest rates remain low and things all of a sudden go back to normal overnight, nothing's going to change. Prices are going to remain where they are, right? And in Queens, year over year, I believe there was a little bit of a decrease. I think it was about 4.5% overall. Now that's counting everything. That's counting almost luxury properties that stay on the market longer. So there's not that kind of situation where people can be chomping at the bit for a great deal where prices are going to be slashed, right? It really depends. If the longer this goes, the more likely that is. I agree with you with that. The longer this goes, the more pent up people. There's going to be people trying to leave the city in droves. There's going to be a lot of different things that are going to that may happen. But we can't tell what happens in the future, but you can kind of see the trends right now. And I was looking on our MLS here in the Queens, Long Island area, and inventory is still pretty level, right? It's lower than it was. Some homes have been taken off the market, but prices have not dropped in any significant fashion. As a matter of fact, I've seen some offers that have been accepted over asking. So you still have that activity, and it's New York. This is a very sought after area. Like, there is limited inventory to this very day. So we'll see. We'll continue to update everyone through these every week, or however we do this, in terms of the trends, in terms of mortgage and the real estate industry here. So I'm glad that you're available for them. I'll put your information below so that they could reach out to you, and hopefully we can get more people through this more educated and hopefully ready to buy something when the time is right for them.
Definitely. I agree with you.
All right. Well, thank you very much for coming on again. And again, her contact info will be below. Veronica, thank you very much for coming on the show.
Thank you for having me, David.
You got it.